When we're looking at the insurance pack, we're seeing gains across the board. Let's look at the last 1 month returns for some of these stocks. And in fact, they're buzzing even today. So they're up nearly 1% on top of some of these gains even today when we're looking at it. So the key trends largely in what's happening in insurance at the moment, we're seeing good growth, especially on the VNB margins front. We're seeing non-par and savings doing quite well. So the margin growth is coming through. Non-par is doing well. Of course, more profitable is the non-par segment typically. We're also seeing good traction in retail protection, but that continues to remain the case. When we're looking at APE growth, that's roughly in the range of 15 to 78%. Of course, 78% being on a lower base, which is broadly what SBI Life has clocked. And we're looking at ULIP growth, which also remains healthy despite a volatile market. We're looking at, in terms of the growth numbers, we're looking at HDFC Life, 22% growth in APE. We're looking at SBI Life, as I did mention, on a lower base, a 78% growth in APE. We're looking at ICICI Pru as well as Max Life, growing a very healthy 15 to 25%. So we're seeing good growth in terms of APE across the board, across companies. Now, talking about margin trends are steadily improving. We are seeing, when you look at an SBI Life, that's gone up quite sharply. We're looking at ICICI Pru Life also with very healthy margins. We're seeing a margin uptick even in HDFC Life. So across the board, we're seeing a margin uptick. LIC, of course, soft on margins, but that's largely on the back of the fact that the non-par segment hasn't grown as well as they would have anticipated. In terms of market share, we're seeing largely stable market shares. SBI Life has lost a bit of market share to LIC, and so has ICICI Pru Life. And when we're looking at the LIC market share, that's gone up quite well, and that's at the expense of some of the other players. But again, that is largely on the par side of things. So non-par hasn't really done very well for LIC when we're looking at it. Now, the LIC, though, has guided for a 10% share in non-par by the end of FY23. At least that's the aspiration. Of course, need to wait and watch out. They're also looking at VNB margins to range between 15 to 16% in FY23. That's a substantial uptick versus the 9% margin it clocked in FY22. So we will have our eyes out on that one as well. HDFC Life too saying that individual protection remains muted, but when we're looking at their margins, the margin has been good, and they're expecting demand to return, especially in the retail term insurance space. So we're looking at a few positives in the insurance space, which is what is leading to this uptick across insurance players.